All right, everyone. Thank you so much for joining us, and good morning, good afternoon, and good evening, depending on where you may be in the world. My name is Sophia Arend, and I'm the Global Blockchain Business Communications and Content Lead. We're so pleased to have you all with us here today for the inaugural session of the GBBC's Investor Series. This is a forum for dialogue and knowledge exchange designed to educate the investment community, including large family offices, hedge funds, venture capital firms, asset managers, endowments, pension funds, and sovereign wealth funds on cryptocurrencies, digital assets, and blockchain technology. Please note that the GBBC Investor Series content is for informational purposes only. The Global Blockchain Business Council USA, its parent company, the Global Blockchain Business Council, or GBBC, nor any subsidiaries or affiliates provide investment advice. For our inaugural session today, we are joined by the A100X Fund for a conversation on redefining blockchain investing. We have with us today A100X managing partners, Nisa, Amoils, and Alex Bulkin, and advisory board member, Rumi Morales. We are also joined by special guest, Sheila Warren, head of blockchain and data policy at the World Economic Forum. The purpose of today's session is to discuss financial inclusion and the democratization of investment opportunities in venture capital, as well as A100X's investment thesis and focus on investing in companies that are applying technology innovations, particularly blockchain, to disrupt large industry sectors and generate social impact, as well as their approach to democratizing venture capital in partnership with AngelList. Just briefly before we begin, I have put up a run of show for your reference. You are welcome to submit questions at any point during the webinar, and we will take them at the end. We will kick off with a welcome and introduction. We will then hear remarks from Sheila Warren, head of blockchain and data policy at the World Economic Forum, followed by remarks from Rumi Morales, advisory board member at A100X. And we will end things with a fireside chat moderated by GBBC CEO Sandra Rowe with managing partners Nisa, Amoils, and Alex Bulkin. As a reminder, you can always submit questions in the Q&A and we'll take them at the end. Thank you all so much for being with us here today. We will now hand things off to Sheila Warren to deliver remarks on financial inclusion and the democratization of investment opportunities in venture capital. Thank you, Sheila.
Thanks, Sophia. Thanks so much for having me. I am absolutely thrilled to be here today to kick off the GBBC Investor Series. And I'm so excited this series is happening. I think this is a conversation that we really badly need to have. What we're doing now, particularly in this area of financing, is shaping the trajectory of the entire blockchain ecosystem at really forever. The consequences are going to be permanent. Now, I was tasked to talk today about financial inclusion as a general matter. And when we talk about financial inclusion, normally we immediately jump to statistics like there are 1.7 billion people without a bank account around the world. At the World Economic Forum, we have a consortium called the Digital Currency Governance Consortium. And in fact, financial inclusion is a critical work stream within this consortium. We're exploring how things like stablecoins, CBDC, crypto can really solve the problems that plague the financial system. Some of these are legacy problems. Some of these are being accelerated in some ways by the advent of other technologies that are orthogonally intersecting with the blockchain ecosystem. Here are examples of the things that we look at. Remittance payments, of course. This is a very common scenario for low-income individuals who want to send money home. And the fees to do this are incredibly high and costly in certain parts of the world. In some parts of the world, it's literally impossible to do this because you simply cannot make the banking system work in a way that can get money from point A to point B. So you resort to things like flying cash and trusting someone to take it and distribute it in your home country. There's also the problem of banking deserts. An example that we've come across recently is Kenya, where making domestic payments and benefiting from services, there is no such infrastructure in certain parts of the world. There's no ability to create a credit history or to create savings, let alone intergenerational wealth transfer that can raise a standard of living for your family, or in that case, for your neighborhood or your village. There are also the questions around small businesses. These are entrepreneurs who are trying to make domestic and international payments. They are subject to often staggering fees that limit their ability to even engage in capital in the first place. They also are cut out of systems like insurance that can help make sure that they're not wiped off the map when something happens, like a catastrophe or natural disaster or a health situation. There's also the gig economy and how that plays into all of this. So we've been speaking to people in Cameroon who get wages and other services from where possible from across the border because they can't necessarily find those services in their own community. So they're able to use their expertise because they're digitally savvy to leverage these opportunities in other parts of the world. So it's important, I think, to step back and think about how do we define financial inclusion? So the World Bank says financial inclusion is the ability for individuals and businesses to access useful and affordable financial products and services that meet their needs. Now, some of the examples that I've given here, things like the creation of a personal credit history, the ability to access loans, micro lending, the ability to have access to capital markets. We think about them when we talk about financial inclusion on this kind of scale where we're talking about extreme poverty. However, these are equally pressing issues in more developed economies and in more articulated sectors like capital markets, like venture capital. Now, I know you're going to hear later from Rumi Morales about inequities within the existing venture capital system. Certainly, there is a tremendous disparity in who gets funded and by whom and who has access to capital in the first place to be able to even indulge in their entrepreneurial dreams. If we are not funding people that are deeply familiar with the problems they're trying to solve, and if that money is going to those who maybe have a very indirect exposure to those problems, we're really missing out on opportunities to raise standard of living around the entire world, not just because that capital has, as we know, it has a very long tail of effect. There are so many studies on if you fund women entrepreneurs, what happens in their communities, what happens in their families. They go out and spend in very smart ways. They spend on things like education and healthcare, things that have lasting and tremendous permanent impacts on their entire communities and on their legacy. And these kinds of things become very challenging to do if there is no such access, or if they have to kind of rely on things like a barter economy. It's no surprise that things like decentralized finance are becoming more and more of a force in our world. It's no surprise that we've seen things like Wall Street bets, come onto the horizon. There is an increasing demand and recognition that people that are not the traditional actors in the financial ecosystem, nevertheless, are remarkably savvy. They have a tremendous amount to contribute. And a lot of what we've done as a society, as a system, is deny them access. Not to education, because they can find that on the interwebs or on Reddit or wherever they may go to find it, but they then don't have the follow-on access they need to really scale that education in ways that are going to be tremendously powerful. It's also no surprise that we're seeing the creator economy explode around NFTs. We're seeing a demand by creators to say our contribution needs to be valued fairly. The forum calls this entire kind of model more generically stakeholder capitalism. How do we ensure that all stakeholders across an entire ecosystem are recognized for their contributions and that we're not unfairly burdening them with risk, saddling them with heavy risk without actually also equitably giving them reward? And lastly, I want to comment briefly on ESG. We tend to focus very heavily in the ESG space on the E, which is obviously critically important. I'm not here in any way to sneeze at the realities of climate change that I think we're all experiencing in our own ways. But we need to focus just as heavily on the S, and specifically on the S, not just on things like diversity within funding, but specifically on how our entire systems are really failing giant parts of the world and of the population. There are some solutions to this that are relatively straightforward. I was just on the phone with Elizabeth Rosiello, our friend who has been based in Senegal and now is in London. And she was talking about how JETRO, the Japanese External Trade Organization, did this pilot program where they basically bought business class tickets for African entrepreneurs, flew them out to Japan, and created very strong funding connections between Japan and parts of the African continent. There are things that are very straightforward. It's about how are you actually sourcing entrepreneurs for your stack? How are you thinking through what kinds of projects make intuitive sense to you? And all of that honestly reflects who's funding, who makes up the funding base. We've seen much more movement than we've seen in previous years around people of color, around women who are actually serving as the funding ecosystem, and they are able to spot with more ease, in some cases, certain kinds of projects and their potential. This is all by way of saying this conversation is such an important one to have in our ecosystem. The decisions we make today about who gets capital, what the accountability mechanisms are in our broader society are going to shape the trajectory of this entire technology. And of course, we're all here because we believe fundamentally and philosophically that blockchain technology is revolutionizing systems that have not served the population as well as they should. They've served some at the expense of others. It's been a bit zero sum, and we can solve a lot of that. So thank you again for allowing me to kick off this series today, and I very much look forward to the rest of the conversation.
Thank you so much, Sheila, for your remarks and insights. As you said, what a wonderful way to kick off our session today. We will now hear from Rumi Morales, A100X Fund Advisory Board Member on the democratization of venture capital and why we need new models. Thank you, Rumi.
Thank you very much. And thanks, Sheila, for your leadership in this space and all the work that you do. Thanks to the Global Blockchain Business Council for inviting A100X to speak today. And I will try to be as dispassionate as possible, but it's going to be hard. Because when we talk about venture capital funding and the inclusion of women and minorities in this space as entrepreneurs and as funders, the statistics are so grim and infuriating. I'm not sure who saw the recent TechCrunch article, and I'm going to go through stats and links, and I can provide all the links to the GBBC if you'd like to forward it on to people listening in your broader network today. But the TechCrunch article that came out, I want to say a couple of days ago, was focused on the fact that in the United States last year, startups raised a record $143 billion. But of that amount, female founders raised only $3 billion. We actually fell $1 billion in a record year. And if you translate this into statistics, it gets worse also the later stage that you get. So amongst seed stage companies, female founders got 7% of all money. And then early stage, the series A and B, it was around 4%. And then late stage was 1% of all venture dollars. Even if you have a mixed team, a male-female founder team, those statistics are a little bit better, but not nearly enough at 16, 15, and 8 respectively. So in total, what we're looking at last year, venture funding in the United States, is that if you're a female founded team or a mixed male and female founded team, you receive 23% of all venture seed money, 19% of all Series A or B money, and only 9% of late stage money, which means 91% of all venture capital dollars last year went to all male teams. And as someone who's been involved in the venture space now for 20 plus years, I wish I could say I've seen improvements over time, but are you kidding me? These statistics are so terrible. Like, why is this happening? Why is this continuing to happen? And I'm not even going to think about COVID in here. I'm not even talking about blockchain in here. We're talking about like general systemic and structural issues that have existed for decades. And I will also note, in 2019, the numbers were a little bit similar. Women did get a little bit more funding in 2019. But of all the female founders, and we know there aren't many, but of all of them, only 4% of female founders, 4% of that small, it's already single digit percent, only 4 of that single digit percent were Black women entrepreneurs, and 2% were Latina. Another way to put this money in context, and in 2019, all the money that went into female founders businesses in 2019 was around $3.5 billion. And that may sound like a lot, but let's also remember that in 2019, SoftBank put $5 billion into WeWork as it was imploding. So that one company got $5 billion as it was going down, and all the rest of the female founders in the States got only half of that. So how do we fix this situation? Many times people can say, well, are female VCs then the answer? We can take a look at that. There are, and I think some of us have seen, whether it was on the back of the Me Too movement and others, where we recognize that we really need to have more diverse voices at the table, that venture capital firms in particular needed to do more to promote diversity in their upper ranks. In 2019, 54 women were named VC partners or general partners at firms with more than $25 million in assets, and that's an all-time record. But in that same year that 54 women became partners, 70 men were named partners. And of the 54 women, only 2 identified as Black or Latina. And I should also note that 65% of VC firms in general lack a female partner, at least as of 2019. But it's important, and the reason I'm talking about, and the reason I also began with all the stats on female founders and now female VCs, is that women are twice as likely to invest in female founders as much as their male counterparts. And also it's important to note that even if females may not be the GP of a fund, 56% of LPs. So maybe you are working in a family office, or you're a high net worth individual, you're in a larger pension fund or asset management firm. 56% of LPs do have women in decision-making roles. So there's a sense that perhaps in this structure, we can trickle down our influence and be able to fund greater opportunities that reflect the diversity and the beauty that is all of the entrepreneurial ideas in this world, regardless of gender. But as I said, I've been in this space now for 20 plus years, and we're still talking about being in the single digits. Something structurally must change. We must be able to lower the barrier for women to become investors, and for minorities as well to become investors without the high barriers to entry that normal fund investing does. And if the more we can extend the diversity in the investing ranks, I do believe we can extend diversity into the worthy entrepreneurial efforts that are being launched every day. That's why for me, it's really important. And I'm so pleased to be an advisory board member at A100X. And you will hear more from Nisa and Alex about the unique model that they have that really addresses a lot of the structural inequities and provides greater opportunities for women and minorities to invest. You also heard from Sheila, obviously, the opportunities for blockchain as well in terms of promoting greater financial inclusion and opportunities in economies of new growth, whether it's in financial services or healthcare or agriculture, or you name it, any place where blockchain has an application. So A100X is very unique. It's focusing on investing in areas where there's the potential for tremendous social impact, but they're also putting their money where their model is and where their mouth is, by lowering the barriers, making it easier for women and minorities to participate in this great opportunity. I would welcome everyone's ideas though, as well. This is going to be an ongoing conversation. I am so thankful to pioneers like A100X for thinking about new models, but I hope all of you will agree that this cannot be tolerated. And it is incumbent upon all of us to think of more and more ways, following leaders like A100X, to be able to provide greater opportunities for women and minorities to invest in new innovations through innovative models themselves. And I would welcome the GBBC, and I do thank them for this inaugural webinar and these ongoing conversations, because they are so critical for our industry and so important for all of you to have a voice in. So thanks for listening to me so far, and it's my pleasure to pass the ball back and to welcome a greater discussion of A100X. So thank you very much.
Thank you so much, Rumi. We will now begin the fireside chat with Nisa, Amoils, and Alex Bulkin, managing partners of A100X, and moderated by GBBC CEO Sandra Rowe. As a reminder to you all, you are welcome to drop questions in the Zoom Q&A, and we will take them following this fireside chat. So without further ado, I'll hand things off to you all. Thank you.
Great. Thank you, Sophia. Thank you, Sheila Warren. Thank you, Rumi Morales. You have really touched upon some pretty big problems, some big structural issues around how do we create more equity and accessibility, particularly with respect to venture capital. So with that, I bring you now Nisa and Alex, our wonderful co-founders, managing partners of A100X. And I'd love for, Nisa in particular, if you could just kick off with Alex on how did you both meet? What is the backstory behind A100X? And then we'll talk a bit more about what exactly it is and what you are planning for the future.
Sure. First of all, I want to thank GBBC. I want to thank Sheila and Rumi for their illustrious comments. And really, to tell you my backstory, I started out as a corporate securities lawyer. I then spent time in the media, and I've been in venture capital now for 10 years. I started investing in the blockchain space about 5 or 6 years ago. And Alex and I have co-invested together when he was at the fund that he started, Coin Fund. And we met through actually a diversity and blockchain initiative called She 256, where Alex was assigned to me. And so that was a few years ago. And when we both left our funds because we thought that there was a huge opportunity and white space in the market here, not only for the moral imperative argument that was laid out so well, but also for returns really first. And this is classic arbitrage opportunity. You have companies that are undershopped, undervalued, yet statistically over-deliver. And all of those statistics are in the book that I wrote of why female founders are still getting 2% of all the money. So with that, I will let Alex introduce himself.
Great.
Yeah, yes. Hi, everybody. Thank you all for listening, and thank you, GBBC, for giving us this opportunity. It is true that when I first joined blockchain, we used to occasionally run little polls on Twitter and Slack, and it was very glaring that there would only be 1 or 2 women among like 100 respondents. So I personally put my name in She 256 because I was like, well, why is that? I just need to understand it. I just need to, try to help. So that's how we met. And, as we continue this conversation, we'll dig in more into A100X and what we're doing.
Great. Well, I really appreciate it. And what Nisa, you mentioned, I think is actually very critical. This is more than about just doing the right thing. This is actually about untapping potential, unlocking additional returns, and frankly, making money. So I think what often gets lost in this narrative is that somehow this is like a bone to throw a group. It's absolutely not the case. And so with that, would love for you to talk about what is A100X and how does AngelList fit into this?
Sure. So A100X is a venture fund that's investing in the best blockchain-enabled businesses. Of course, we invest in women, but we're not a gender lens-focused fund. We are investing not only in financial services use cases, but also using the technology in areas such as healthcare and climate change and supply chains and identity and title, and all of the other areas that have been underhyped in the media while we're focused on the price of crypto. But all of these areas are really important and will be the next wave. And we like to say that we're pre-hype investors, and I think we've proven that out in our returns so far. And I'll let Alex tell you about what he's done, especially in the NFT space.
Yeah, so before getting to that, I think from Sheila's and Rumi's comments, I just want to circle back to that and maybe express why this is such a huge opportunity. We are looking at a really big societal change right now. You can see that in how capital moves. You can see it in what kind of products people are looking for. We can see it in Sheila's work around World Economic Forum economic inclusion. And the one very particular aspect of this really major global macro change is its community-driven nature. Okay, as the community-driven nature of it is multifaceted. Blockchain comes in as a technology that supports community-driven projects and community-driven, stakeholder inclusion, but also in order to be an investor in the community-driven technology, you have to be community-driven yourself. In many cases, when working with other VCs and noting their focus, and they are very usually, men-led companies who take their attention to places that are very narrow and specific, and generally really focus on one particular aspect of the technology. We try to diversify our LP base precisely because that aligns our incentive to invest into community-driven tech, right? So it is really essential that we don't only have a community-driven technology focus, but also that we become a community-driven LP base. Because climate change, for example, is one area where the stronger change comes from grassroots. Financial inclusion is one area where the change comes from grassroots. So that's why we're trying to combine these two seemingly different approaches. One is democratizing the LP base, and another one is looking at this specific set of blockchain companies.
And where AngelList fits into, just to answer your question, they operate as our back-end service provider instead of us having 4 different ones. And what this does really is automates the process first and foremost, and makes it democratizes. That's their ethos, is to democratize access to opportunities to invest in startups to more people. And because of that, we're able to lower our minimum for women and minorities to be able to invest in the fund, which normally would not be accessible to them at such high amounts. And so what we've seen in the blockchain sector is most of the wealth creation going to, if you look at the Forbes list of the richest, Forbes richest, it's all men. It's all white men, basically. And so we want to be able to open up the wealth creation opportunity to more people, and also the opportunity to learn along with us if they're not familiar with the technology and what it can do.
And if you guys could also explain to those, particularly, I think a lot of people who've dialed in do not understand the way venture capital works, being an investor in venture capital. What's usually a minimum for someone to cut a check to become an LP?
So maybe I'll take that. To start a little bit from the backstory, venture capital funds are, of course, subject to regulation. And from the regulation standpoint, a fund cannot have more than 99 investors. And that's just how, the legal structure works. So it's traditionally taken quite a long time and quite a large amount of legal expense to launch a venture fund. And those funds get launched every, let's say, 3 to 5 years by the same group of GPs. And what that means is they raise a pretty large amount of money, let's say $25 to $100 million. And they have to make sure that they can reach that target amount with only 99 investors, which makes their minimum, I have barely ever seen anything lower than $250K as a minimum for a traditional venture fund. What AngelList have done is they have created a structure where instead of working with one fund vehicle, you're launching one every quarter. That's what it means to be a rolling fund. And what that means is you can take more LPs because your structure allows, roughly, 4 times that number of LPs per year. And what that means is what we can do is we can open up our investment to a real group of retail investors. What's interesting, what I have found so far is that people don't usually see themselves as being able to and welcome to invest in the VC asset class. It's really probably the biggest hurdle for us is just that understanding that, when a potential LP sees us, they don't know that they're our potential LP. And so we're happy to tackle that hurdle as a fund because we believe, again, in the community-driven investment model and having more and more diverse LP base, because that will allow us to invest in the kinds of projects that we invest in.
That's great. Thank you both for explaining that. And we've already started getting a few questions as you guys have been speaking. I'm going to go and take some of the questions I already have, but also incorporate the ones that are coming in. There's actually a very good question here, which we do need to clarify. Has the SEC rule changed regarding who qualifies as an accredited investor, or does that still hold?
Yes, it has. It was broadened actually last quarter to include not only based on your wealth, but also based on your sophistication or educational components by passing a test. And I think if you get your Series 7 or one of those tests, you're automatically an accredited investor now. That being said, that definition really needs to broaden even further, and that is being discussed on the Hill. With the Jobs Act and Reg CF allowing unaccredited investors to invest in these opportunities, and I'm on the board of one of the platforms, Republic, you can actually, now they've increased that amount from $1 million to $5 million, which went into effect last week. So there will be more opportunities, even if you're unaccredited investor, to invest and to participate in the wealth creation. And a lot of that also ties into security token offerings, and why we're in this space in general, because there are alternative ways to raise capital outside of this systemic problem that still exists that are going to tie in with crowdfunding.
Great. And you've got one more question here around it's great that there is a concept called rolling funds that obviously AngelList has automated for you guys. But given the unpredictability factor, because it is every quarter, are you concerned about, sort of how much you raise in a given quarter? Have you mitigated that somehow? Any thoughts?
We don't see it as a negative. I think there's always, actually in some sense, that's even the positive, because closing every quarter, so having such frequent closes actually allows us to have potential deals lined up even before the close happens. And that allows us to drive attention to our investment opportunity with a lot more clarity, us giving our potential LPs a lot more clarity on what we're doing than in any traditional structure. So the traditional structure is generally non-transparent. You have to fully rely on the reputation and trust of the GP. In this case, as an LP, you actually have a lot of opportunity to learn about what we do before investing. And so that actually tends to result in driving more, not less, funding, and has created a very positive, unusual relationship between us and potential LPs.
The other thing is a 4-quarter minimum, so we do have some visibility into how much we have for the coming quarters.
Excellent point. There is a 4-quarter minimum that you need to commit to as an investor. Understood. Thank you for that clarification. We're going to stay on the democratization of investing point. We will talk about what you're planning on investing in, but you're still getting some questions, and I think we do want to delve into a couple more questions here. So what is the right balance? You guys are obviously, A100X is a model that is really kind of breaking away from the traditional way of raising funds. How, someone is asking, do we open up investing while also making sure we're protecting consumers? Because as we've seen in the crypto space, we do have lots of people who manage to pile in when there are no guardrails, and there are always, those bad actors in the space who will take advantage.
Well, we're not investing in crypto per se. That's one thing. And that is the reason, we think the risk profile right now for what's happening in the space is too high to put other people's money at risk. We, of course, have invested in that DeFi but I think as a fiduciary of other people's money, we don't feel like and I'm a lawyer, so I know the regulatory guardrails very well, and we don't feel like it's fair to put our investors' money at risk that way. Hopefully that answers the question.
Well, and on the other end of things, of course, there are guardrails. So we're operating under a standard SEC regime where we only can accept accredited investors. So on that side of things, it's pretty clear.
Yeah, so reality is you are redesigning the way a venture capital fund operates, but within design and guardrails of existing SEC rules. So that's important for everyone to keep in mind, with the help of AngelList, who's automating some of that work for you in the background. All right, let's shift gears here to your investment thesis. We've alluded to some elements of it, but it would be really just great if we could just get your clear views on what your focus areas. Do you have a proclivity to any given area, one over another? It'd be great to get your thoughts on that.
Yes, so we are both quite experienced in investing in blockchain and crypto asset space, including DeFi and non-fungible tokens. Our thesis mainly is trying to escape that particular niche. With respect to art, I think we could still probably do it, but with respect to decentralized finance and pure blockchain crypto technology, we're not looking at that. What our thesis basically leads us to do is to look for applications of blockchain and artificial intelligence to a disruption of traditional industries, specifically with eye towards impact and ESG. The reason why we believe that that's a really meaningful sector is because we've just experienced about 5 years of incredible learnings from the crypto space. While I personally have been majorly disillusioned with the crypto space itself, I still hold a tremendous amount of appreciation and respect for the ideas that came out of the crypto space. And I believe that these ideas will give rise to whole new industries and asset classes, just as the participants with experience in these industries learn about crypto and blockchain and apply these learnings to their specific sectors. So to give you an example, really my favorite one is in climate finance. And this is maybe just one area that falls under this thesis, where the carbon markets, everybody understands how important carbon markets are to rectifying the climate change. They basically allow you to stop externalizing environmental expenses. The problem is that the carbon finance space right now is quite fragmented, and the traditional technology with which these types of assets are being managed and created and traded is just not sufficient for the kind of grassroots global reach that that market really needs to take off. And we believe that using blockchain as a platform and the model for that type of finance will give it a tremendous boost, especially when supported by a diverse set of investors. Similarly, you can see very similar ideas happening in supply chain, where organizing between small businesses within supply chain can only happen on blockchain. And what it leads towards, again, is more transparency, more environmental impact, more access for international small business, which is so important for the type of the inclusion that Sheila was talking about. So these are just some examples. I'll let Nisa add to this.
Sure.
So a lot of examples that I like to give, because they're so relevant to the pandemic, are what has been exposed as the issues in our healthcare system. And whether that be vaccine rollouts or coordination of clinical trials or contact tracing, or supply chains for drugs and medical equipment, we've seen a lot of different startups trying to tackle these issues. And I think that's going to be a huge area. And we'll start to read more about what's happening in that area coming up. But what we want to do really is to capture all of these returns before the hype cycle, before it blows up. So
Right. You want
just to add one thing to this, sometimes potential LPs ask us, well, how are you going to find these deals within these narrow, kind of exotic segments of the industry? The answer is these are not narrow and exotic. We had absolutely more deals that came our way than we can even begin to look at actually so far. And that is because this is not exotic. It's because there's a lot of companies that are actually operating within that space that are having difficulty raising from other venture funds, because other venture funds fall into two general categories. One of them is either a token-focused blockchain fund, which will not invest in a non-token use case, and the other one is a technology VC fund, which will not invest in a blockchain use case. And right in between those, there is a kind of a empty space that has a lot of deals, a lot of really good ideas, a lot of industry insiders building, disruptive tech for their industry. It's actually quite fascinating.
Appreciate that. And, Rumi, I know you're here, you are on the board, happy for you to jump in as and when with some of these questions as well. Blockchain, please, can you guys talk a little bit about why you think in your investment thesis, blockchain does drive social impact, and you name some of the industries that you find interesting, but what is it about blockchain technology that you think is particularly transformative to drive social impact?
I'll have to take this one as well. I think, well, it's actually several things. Social impact, because it has more drive when it comes from the grassroots, requires a technology that allows the grassroots participant to use it and to come in with their own ideas and improvements. So blockchain is unique in that what we've seen come out of the crypto space is this notion that blockchain often serves as an open platform, which means that basically improvements can happen by individuals and they can be delivered right from their quote unquote garages. As long as a company creates a blockchain system that begins to provide service to a specific industry, others then can come in and improve it in a way that is more collaborative than any traditional SaaS model, which typically operates under IP restrictions and proprietary sort of gateways, right? The other reason why blockchain is so interesting is because in many ways, blockchain leads to social disruption within within the space of who can access a certain system or a certain asset class. And we've seen blockchain systems kind of serve as ways for people to enter. Like, for example, in Kenya, I have a company that I'm working with as an advisor that has managed to start a whole ecosystem in Kenya for financial inclusion, and they could not have done it without the blockchain technology. Also, a lot of disruption comes from technology innovation, and our fund also focuses on other frontier tech, such as artificial intelligence, which I think we are only scratching a surface for in terms of its applications to various industries that we're looking at.
Sure. Nisa, do you want to add anything?
Well, I think there's a social impact component that you're seeing in general with DeFi and with what's happening with Robinhood and Reddit and GameStop, you're seeing the protests from people who've been shut out of the system, right? And so we want to be able to include all of those different people and use the technology in ways that it will allow that to happen. And it doesn't always have to be the primary goal of the company. For instance, we're investing in a company that is automating title insurance for automobiles. And that will have the secondary effect of removing cars from landfill and allowing greater use of the land. So there's always these primary, secondary, tertiary effects that we're looking for to make the world better.
Fantastic. And Rumi, thank you for your remarks. And frankly, I don't know how you managed to keep your composure considering how dismal some of those statistics were. But, when you think about when I would imagine Alex and Nisa approached you, what made you say, look, I'm stretched thin. You and I share, we're on board of BitGive Foundation. We've got a lot going on. But what made you decide, I want to support this effort? What motivated you?
Right. I would say three primary reasons. One is I really do believe in the investment areas that they are focused on. As you can call it pre-hype or, investing in areas before the buzzwords exist, but there's a real need for these tools. You're not creating, and not to knock on anyone in the metaverse, because obviously Outlier Ventures, the firm that I'm a partner with, is very involved with NFTs in the metaverse, but there are so many other practical applications for blockchain. And I have been, as much of a crypto person as I am, I'm also an institutional animal, having spent 7 years at the CME and 7 at Goldman Sachs, some of those with Alex actually, that we know the real problems that can be improved upon with this technology. So their focus on understanding the market, having lived it, I think is really, really critical to A100X's future success. Now, obviously also what I really like as well is the rolling fund model. As someone who has been involved in venture capital for decades, has struggled to raise my own fund, and has also struggled advising funds raising, that this structure needs to change. This traditional sense of, you go on a roadshow, it's really hard as a first-time founder to get funded. Many times people say they want to be able to support women or minorities, and then when you actually show up the door, the support is not there. It is incredibly disheartening, and I think we need to blow up this model. It's still reliant on so many old ways of working that just make no sense in today's economy. And the third reason is something that Alex and Nisa haven't talked about enough, and I can understand perhaps their hesitance of tooting their own horn, but they are both really experienced, smart, grounded people. And in the crypto space and the blockchain space, it's easy perhaps to go follow the carnival barkers because they're loud and they're pointing at like hot trends. But Nisa and Alex have this very, very strong track record in the work that they've done and the great investments that they've made. I feel personally very confident and comfortable vouching for their ability to be able to find good opportunities to invest in. And they just really have the common sense and experience together with the vision and the optimism to make A100X a strong and important success in this space.
Thank you for that, and appreciate you giving insights into why you think this is important. Wanted to turn back to Nisa and Alex with respect to deal flow. Where are you in your investment cycle, and how does an entrepreneur reach out to you?
So we've just started this quarter, and we are people are welcome to email us, Nisa at A100X or Alex at A100X. You can find us on Twitter, LinkedIn, and I write for Forbes. And you can find us sometimes on TV, etc. We definitely get a lot of inbound, which is great, and our doors are open to entrepreneurs.
Fantastic.
And Twitter DMs are also open.
Fantastic. Great. Actually, I'm going to ask this because I think founders do sometimes trip up. what are some guidelines do you have? Do you have a couple points of advice for founders when they're sending you their deck or they're trying to obviously pitch you their idea? You can either frame it in the context of things that really irritate you and then, you don't want to read it anymore, or in the context of what actually does impress you, like in terms of the approach, and presume it's an email or a DM.
Well, I think for me, it's that they've done some research on us. Most often I get pitched beauty, fashion, food, or e-commerce deals. And they presume that that's what I invest in because I'm female. So it would be great to, have just some kind of cursory understanding of who we are.
Do your homework. Watch this video. Go ahead, Alex.
I think it's clarity about what your strengths are. It's a deck that says I'm launching a great, crypto exchange product, and because there is a great demand for it, tells me nothing because I don't know why you're the best person to do it. So it's really important for me, and I am, I'm not like many VCs who don't care if the project is your mission or just your project, but I like to see founders who know themselves just as good, just as well as they know their products.
It's great. Thank you. And Rumi, you are an investor, so do you want to say anything to that effect?
I'm just really, I don't know at this point what more I'm happy I can add at this point.
Great. Well, thanks for that. I think.
Well, I just want to defend Rumi and say that the metaverse is very important, and that NFTs are also important because I think we'll eliminate the term starving artist. I think there's a reallocation of capital going to people who create,
Yes.
and less about the middlemen. So, we're definitely bullish on that area as well.
Yes.
Sometimes I feel for me like I wear many hats in this. I mean, I don't want to, but people can fall into different camps. For me, overall, it's about supporting the growth in the space generally, but also not getting too caught up with the hype. And even for those focused on NFTs and the metaverse, always appreciate those who are building things that are that are a part of a basic human need in this world, rather than just, hey, this is cool to have for now.
You've got a few more questions here. I'm going to just clarify. One's a point of clarification. I think you were referring to the Forbes crypto billionaire list, not the general billionaire list.
Yes.
So for the person who is making that comment, it is actually the crypto billionaire list. This is actually a question for all of you guys, potentially. SPACs, what do SPACs and that increase of, kind of a way to raise capital, what impact does it have on the VC landscape, if any?
So it's actually a positive because our companies are exiting faster. Mm-hmm. It's just another way for them to exit. And oftentimes what you're seeing is companies that are very early stage even, sometimes with no revenue, SPACing, and that's a bit scary. But we definitely are seeing a lot more demand for liquidity, and this is just another avenue. So it's very good for venture capital.
Right.
I'll go back on my soapbox though and say, is it good for women in venture capital? I don't know the statistics for women and minorities involved in SPACs. I have to presume it's reflective of what we see in the normal environment. So I do applaud the financial innovation, if you want to call it that. SPACs have been around for a while, but structurally, are they really changing the situation for everyone? Are they really promoting financial inclusion? No.
Yeah, Rumi, I'll have to say, I know of 5 crypto deals that are either in the works or have announced, and the statistics bear pretty much the same old. Okay, well, you've got a question here from Patrick. It's actually all 3 of you. How are family offices viewing blockchain? Is the conversation shifting from education to now informed investing? Any views on that?
Yeah, I think there's a really broad spectrum of attitudes we're seeing, from resistance to curiosity to enthusiasm. I think the most, to me, valid ways that family offices look at crypto specifically is as a hedge against more traditional finance, which they're increasingly starting to mistrust. As far as blockchain as a technology, which is kind of our focus, I think everybody hears the buzzword, everybody's curious, and it will take quite a bit of education to really create a kind of understanding that took maybe 5-10 years in the dot-com era, before we actually knew what internet is about. We still are not there with blockchain. Well, this is what we're trying to change. We're trying to create clarity about the question of what is blockchain and what it's for. So Nisa, do you have anything to add there?
So I come from that world. In fact, did a few panels this week, and I'm constantly educating family offices. And really the shift has been very dramatic. 3 years ago, it was, no way, I mean, with the institutional stampede that has happened in 2020, starting with Paul Tudor Jones and the Bitcoin allocation, and then the corporate treasuries. And so I think Bitcoin is really a gateway drug for these people, and they're excited and they want to learn more, and they are investing. That is for sure. That has changed.
Great.
There's a question on this list I would really love to take before we wrap up. Is that
Go
okay?
for it. It's all yours.
It's a question about how do we plan to differentiate ourselves from other VCs from the founder's point of view. What I bring personally and together with Nisa is a lot of helpful attention. And I've worked with founders before specifically on their technology strategy and really fitting it into the best possible product design, because there's so much learning that needs to happen. So I'm here to help. I'm not here to extract.
And I would say that for me, I can offer my media platform as a value add to founders. And also being a securities lawyer, of course, regulatory guidance is very helpful.
Absolutely.
I'd also add, it's not just me as a board or advisory board member. There's a wonderful group of people alongside me supporting Alex and Nisa in this journey, and we all have a breadth of backgrounds in blockchain, cryptocurrency, traditional asset management, and venture capital.
Well, with that, I'm going to say we've blown through an hour. It was pretty easy with amazing folks like you guys. And frankly, you are taking the first major critical step in a structural change that we need to see. And frankly, I hope many more follow in your footsteps. As a, invitation is sometimes the greatest flattery. I hope many follow after you, and that you trailblaze this path. So for anyone who wants to learn more, please reach out directly to Nisa, Alex, and Rumi. And thank you very much. Appreciate it.
Thank you, Sandra.
Thank you, Sandra and Sophia. Thank you, Rumi, for joining us.
Yes.
Thanks, everyone.
Sophia.
Thanks everyone so much for joining us, and particularly to A100X Fund managing partners, Rumi and Sheila, for taking the time to be here with us today. This has been an absolutely great start to the Investor Series, highlighting a crucially important topic and the vision behind A100X. The GBBC will share a recording of the webinar and links to learn more with everyone who joined and registered today. You can also access this recording on GBBC's YouTube in the coming days. Thanks all so much for joining us, and you can follow us online for updates on what the GBBC is doing and what our members are up to.